Welcome back. If you're new here, in this series I review various ETFs to give beginner investors an idea of what the ETF holds and how the ETF has performed in the past. Today I'll be discussing Vanguard's growth ETF portfolio, VGRO. I'll get into some goals and highlights of this ETF and provide some input on the assets held. VGRO primarily focuses on a mix of fixed income and equity positions through stock and ETF ownership. The fund seeks to be balanced into 20% fixed income and 80% equity. Note that there is a rebalancing when these positions deviate from the 20% and 80% allocations. VGRO is expected to provide broad-based exposure to equity and fixed income markets. This ETF has a management fee of 0.22%, which is very competitive when seeking an all-in-one ETF like this. VGRO has historically returned about 8.8% since its inception in 2018, which is fairly respectable when considering its volatility. It also yields about 1.7% in quarterly distributions due to the fixed income assets held in this fund. The majority of the top holdings for this ETF are growth companies such as Apple, Microsoft, and Shopify. There are some value companies like TD and RBC that also contributes to the quarterly distributions. The overall fixed income to equity allocations are 20.2% fixed income and 79.8% equity, which corresponds to the ETF's goals highlighted before. With stock positions, this fund also holds other broad-based ETFs that cover both equity and fixed income markets. It holds index ETFs such as the US Total Stock Market and the Canadian All Cap Index, as well as Canadian and global bond ETFs. These are great core holdings and allows the fund to be exposed to various markets. VGRO focuses on large cap stocks, making up over 80% of the equity holdings. There is little exposure to smaller cap companies, and this lowers the overall volatility of the equity positions. VGRO's fixed income positions primarily deals in Canada and a little in the United States. It does have little exposure to other regions, but these are fairly small positions. The equity portion is reversed, and most of the fund focuses on the US markets, with Canada making up about 30% of the allocation. This makes sense since historically US markets have outperformed Canadian markets. For investors who want to know about the credit quality of the fixed income allocations, we see this fund is split between AAA and AA ratings, with none rated lower than BBB. This makes the fixed income positions more stable and predictable. VGRO has only been around for 3 years, and the annual distribution has been increasing 3 to 4 cents per year. The ETF pays a quarterly distribution of about 12 cents per share. We see most of the cash flow comes from treasuries, bonds, and company dividends, and have historically been reliable on paying these distributions. I believe VGRO successfully achieves its goals of tracking indices and maintaining an 80-20 ratio of equity and fixed income. VGRO is comparable to most robo-advisors offered by institutions, as it rebalances often and offers broad exposure to both equity and fixed income markets in North America. If you want to see more ETF reviews, like, subscribe, and comment a suggestion below.